So today we are going to solve question number October 2022, question number B, okay, of the first part 1B. So here you have to supposed to prepare the statement of profit and loss and comprehensive income for the year ended 30th September 2022. So the first one is the revenue. Okay, so we had already calculated what was the revenue here. Okay, we had calculated revenue to be around 106,400. So let's write that. So the revenue is going to be 106,400. Okay, then cost of sales, so opening inventory plus purchases plus closing, okay, less closing inventory. So 10,900. So let's write that. So 10,900. Then you have the purchases. So purchases is going to be equal to, we had calculated the total purchases, it is 58,500. So let's write that. So 58,500. And then we had the closing inventory. So the closing inventory is 8,100. So less the closing inventory. Okay. And he has also said that some of the he took goods to the value of 250 pounds for his own use. Okay, so we have to subtract from the opening inventory goods which was taken by the person. Okay, so we will have to include um, goods drawn, okay, for own use. So that will be equal to 250. So that also we have to subtract. Now let's calculate the total, okay, COS because of that. So 10,900 plus 58,500 minus 250 minus 8,100. So that value is going to be equal to 21050. So this one we have to subtract to get the gross profit. So revenues, okay, 106,400 minus 6150, that value is going to be equal to 45,350. There are any some expenses. First one is a bank loan interest. Okay, bank loan interest, it says that the bank loan and the interest payment included the first of the 5 annual repayments plus interest charges. So the bank loan, okay, at the beginning was 4,000 and at the ending it was 3,200, which means how much was the bank loan paid off towards the loan? Towards the loan it was 800. So, and here from the bank payment, summarized payment, we can see that this is bank loan plus interest included 900. So bank loan plus interest included, so we have to subtract. So 900 minus 800, okay, we have to subtract. And then we see that there was an accrued loan interest of 90. So still there was, okay, in loan interest of 90 to be paid. So which means that we have to add the ending accrued balance. So 900 minus 800 plus 190 will be equal to 190 is towards the interest of bank loan. Okay, now why? Because we have to subtract the bank loan, the amount that was paid towards the loan, and we have to include only the bank loan interest, okay, as an expense. Then we have allowance for 5% of irrecoverable debt to be created. So we will create 5% of the ending trade balance. So 5% of, Okay, 5 percentage of the 7,800. So 7,800, so that will be equal to 390. We will get the depreciation value. So for the computer it is 8,000 minus 5,700. So that value is going to be equal to 2,300. So this value is going to be 2,300. Then we have the depreciation of the equipment. So the depreciation of the equipment is 11,000 minus 7,000. Okay. So apart from that, 11,000 minus 7,000. Apart from that, is there anything else we have mentioned in the bank statement we have to see? So first one here they are mentioning there was a sale of equipment. Okay, there was a sale of equipment for 1,500. Remove that. Okay, assuming okay that was received, so that value also you will remove, and then you will know whether it was a profit or a loss. Assuming that the entire vehicle was equipment was sold off, we can indicate that this might be a loss. So 11,000 minus 7,000 minus 1,500. So then we have to see motor vehicle. There was 3,000, but the ending depreciation value has increased. Okay, and also here for the motor vehicle they have given information like there is a sale of motor vehicle and there is also a purchase of motor vehicle. Okay, so let's include all that. Vehicle which was at 3,000, it was sold off. Okay, it was sold off, and this 9,000 okay which was bought, that depreciation has become 6,000, that value has become 6,300. So it cannot go in depreciation. Okay, the carrying value cannot go down. Okay, so much so we just assume this new vehicle which was bought, that has got depreciated to 6,300. So assuming that, so 9,000 minus 6,300, so that is 2,700. Now what happens to the first 3,000, assuming it was sold off, because there was a sale of motor vehicle, it was sold off at 4,200. So the difference in amount is considered as profit. Okay, so we assume there was a profit on the sale of equipment. So that value is 3,000 minus 4,200. Okay. Since we don't know the exact depreciation amount, we just assume they made a profit of 1,200. Okay. Now, then we have, okay, what are the other things? There was also wages that was paid. Okay, so let's talk about the wages. So wages is equal to 7,100. Okay, 7,100, and here there is 4,700. So let's underline all the wages here. So the wages are going to be okay 7,100, and then here also there is a wages information 4,050. So let's include all the wages, and then here okay there is an information about the wages ending and the closing balances. Okay, so we assume that so there was okay, what was the wages paid? Okay, the wages paid was 7,100 plus 4,750 was paid. Okay, that was the expense, but they already had included some old wages from the past. Okay, so that we have to remove it, so we just subtract, and then 300 had got prepaid, so you still remove the 300 also. So then we will have the actual wages paid. So the actual wages paid will be 7,000 plus 4,750 minus 400 minus 300. And is there any other information about the wages? We have to just check. And then it says that included in the wages recorded in the back account were the withdrawals of 2,000. This was towards the drawing. So the entire wage was not the paid towards the wages. Some was paid towards the drawings also. So you include minus 2,500. So the value will be 7,100. Okay, the value is going to be 7,100 plus 4,750 minus 400 minus 300 minus 2,500. So that value is 8,650. So the wages paid towards wages were 8,650. And then the other were rent and rates. Okay, so another thing was rent and rates. So let's include that. So the rent and the rates paid were 6,500. Okay, first one was 6,500, and then 6,500, and then there was 500 prepaid. So you remove 500, had become prepaid, and there is no other information for the rents. So the total rent and rates paid towards the expenses were 6,000. Okay, then we had general expenses. Okay, so the general expenses, let's write general expenses. So the general expenses were 11,200. Okay, 11,200 plus 3,250. Okay, this was paid towards the general expense, 3,250. And then was there any other information? There is none, no other information. So the total was paid towards the general expenses. So 11,200 plus 3,250. Okay, that value is going to be 14,450. Okay. So these were the expenses that was incurred. Okay, these were the expenses. So now let's calculate the total of this expense. So the total expenses will be so 190 plus 190 plus 390 plus 2,300 plus 2,500 plus 2,700 plus 8,650 plus 6,000 plus 14,450. So that value is going to be 37,100. So the value is going to be 37,180. So 37,180. Now the total of the gross profit plus the income is going to be equal to 45,350 plus 1,200. So 45,350 plus 1,200. So that is 46,550. So 46,550 minus 37,180 is going to be equal to minus 37,180. That is equal to 9,370. So the profit is going to be equal to 9,370.